Knowing this one concept changed my trading. In this video, I'll be going over the dynamics and nuances of draw on liquidity. But before we get started in this video, make sure to follow me on Instagram at Spektrades. If you have any questions, make sure to DM me. Let's get into this video. Now that we know the power of draw on liquidity and how it's truly important for us to know our draw on liquidity when we are trading, now we'll be going over the definitions and the types of draw on liquidities, and then we'll go on the chart and show you multiple examples of draw on liquidities and how we trade them. A draw on liquidity is an area in a premium or discount zone where price is likely to be pulled toward it as liquidity is hidden beneath. Right here we have two schematics of how our draw on liquidity is supposed to look like and the types of draw on liquidities that we have. As you can see right here, for our draw on liquidity, our main draw on liquidity is where we exit out of our position. So right here we have a internal range position. Right here we have this order block, this old range from this demand zone, and where are we looking to pull toward to? We're looking for price to come inside of this zone right here and then to pull toward to an old high. This old high right here is what we claim as our draw on liquidity. Just like right here, price taps inside of this supply zone, and where are we looking for price to pull toward to? We want price to pull toward this old low right here. This old low will signify our draw on liquidity. This is where price is likely to be pulled toward to because liquidity is hiding beneath these old highs and old lows. And for right here, for our types of liquidity, we have equal highs / equal lows. We have previous monthly highs and lows. We have previous weekly highs and lows. We have previous daily lows and highs. We have previous kill zone highs and lows, and we also have fair value gaps. Fair value gaps are the magnets of the market. Price will always pull towards those zones. And also we have PD arrays in premium or discount zone. Those are like the main types of draw on liquidity. And to add just a secret one in there for the ones that are taking notes, the sessions also can be drawn on liquidity. Say that London created an old low. For New York session, price may pull toward to that London low or London high as our draw on liquidity. So previous sessions also can be draw on liquidity. So now we understand the main framework of draw on liquidity in the definitions, in the schematics, in what it looks like, in the main types of draw on liquidity. I hope you took notes on all of this right here. Now let's hop on the charts and see exactly multiple examples of our draw on liquidity. In this example right here, as we can see, price came and swept liquidity from these old highs right here and mitigated our supply zone, and then gave us a sweep displacement of this old, give us a market structure shift of this old low, and price came back and rebalanced this fair value gap and also this old low, and pushing down lower and give us a firm body breaker structure. And for our draw on liquidity, just like we just learned, main draw on liquidity where we can look to take our profits from is these old lows. Just like I stated, old session lows or old session highs, or previous day lows or previous day highs, or just plain old lows and old highs also can be used as draw on liquidity. Now let's play price and see how price reacts to this draw on liquidity. And just like that, as you can see, price came and swept this draw on liquidity because this was one of our main liquidity points. A lot of liquidity is hiding below these old lows. A lot of people were hiding their stop losses below these old lows, hoping for price to keep pushing higher. So what did price come and do? Price pulled toward our draw on liquidity and took those early buyers out, and then reversed to push price higher. Now let's look at some more examples. Now for our next example, price created these relative equal highs right here and then pushed lower and give us this market shift, this old low that pushed price higher. And then what we can see, price left us this fair value gap with this inducement high right above it. Now let's see how price react to this fair value gap. Now as we can see, price came cleanly inside of our fair value gap, wick inside of it, and where is our main draw on liquidity? Our main draw on liquidity were these old lows right here. If you guys guessed that, you would be right here. DOL stands for draw on liquidity. These old lows right here. This would be a safe target to take your profit. Price came back up, clean this inducement high, tap inside of our fair value gap, inducement high. A lot of confluences aligned with this zone. And then we have our clear draw on liquidity, this old low. Price wicked it and pushed lower to clear that old low. Now let's look at some more examples. And then right here we have this beautiful model right here that formed. Price cleared liquidity from these old lows and gave us a market shift of these old highs right here. And price left this small fair value gap. It's also aligned with this broken old high. And price built inducement right near this fair value gap. Like, why did price come close to this fair value gap but not mitigate it? This is what you call a engineered liquidity low right here. Price come back down, clears this engineered liquidity low, filling our fair value gap, slash our broken old high. And where is our draw on liquidity? Our draw on liquidity is previous old highs, just like I stated, or previous old lows, depends on the setup. So right here we have our buy side liquidity. So this will be our draw on liquidity. This is where we can expect for price to pull towards to and for us to take our profits. So when price reaches this old high right here, we just clear, take our profits, and step away from the market. So this right here in this setup, this is our draw on liquidity, this old high. Now let's look for one more setup. Our last setup, as you guys can see, price left this old fair value gap right here, and price came back down, remitigated this old fair value gap. So this fair value gap is invalid now. And then we left this new zone right here, this new order block, this bullish engulfing order block. We extended, and price engineered another liquidity low right above it. Price came back down, purged this liquidity low to come and sweep our draw on liquidity, our old high right here. So this right here is our last draw on liquidity, our old high. This is what we call a buy side liquidity also, because now this old high, it failed to push price lower. That's the main thing where price will come back and clear this old high, because this old high was just used to push price lower to mitigate this demand zone. And once this job is done right here, after price mitigates this demand zone, this old high's job is done now. So price has now come back and pushed through it and cleared this old high to balance the market. Thank you for watching this video. I hope you took plenty notes and gained a ton of value. If you want to support me further, make sure you like and subscribe and comment below what you think. This is it. Spektrades out.